Hi, welcome back to the channel. In today's episode, I want to talk to you about what's happening with Russian oil because the price of oil has collapsed. And the reason for this is because of the direct sanctions that were applied against both Rosneft and Lukoil, the largest and the second largest oil producers in Russia. Up until the 22nd of October, those companies were happily trading away. They didn't have any sanctions against them. However, Donald Trump decided that enough was enough in terms of the lack of a peace process being put forward by Russia. And so he directly sanctioned both of those entities. And as we've talked about in previous videos, one of the reasons why they weren't sanctioned at the start of the war was because the West was worried that taking out Russian oil supplies would have actually thrown the supply of global oil out of kilter and therefore forced the price up. It could have got as high as $200 per barrel, and that potentially would have caused a global recession. So everybody was holding off. However, we've now got a surplus of oil, and that's been pushing the oil price down over the past 12 months or so. And so nobody's as worried that Russian oil is going to tip the global economy into a recession. Now, the impact of those sanctions has only really just kicked in because the 21st of November was the date that was set when they were announced for everybody to conclude all of their dealings with Rosneft and Lukoil. So we're now starting to see the full impact of these sanctions hitting Russian oil. And the price has fallen to around $36 per barrel. And that compares to around $62 for Brent crude oil. So we are talking a massive discount here. If we have a look at this chart, it shows the movement in the price of Brent crude oil, which is the global benchmark for oil. So this basically tells us what the price of a barrel of oil is at any time. And you can see that immediately following the invasion of Ukraine, prices spiked at around $120 per barrel. So they more than doubled in a very short space of time. However, over the past 3.5 years, we have seen prices coming down consistently. And you can see there's a very strong downward trend here. And the reason why this is important is because higher oil prices are good for oil-producing countries such as Russia. Russia is actually the world's largest exporter of oil because it produces so much oil that it obviously doesn't need most of it, and it's been exporting previously to Europe, and over the past 3 years or so, a lot of it has been going to China, India, and Turkey. They're the three biggest buyers. So when the price of oil goes down, it's bad news for countries like Russia because it just means that their most valuable product is now worth less, and so you're earning less in revenue terms. And because oil is a relatively fixed price commodity, because you have a lot of fixed costs, so in terms of all of your costs, they don't rise proportionately to the amount that you're selling. So when prices are high, you make extra profit. When prices go down, then obviously that squeezes your profit margins. So that's what's been happening across the board for all oil producing countries. But from Russia's point of view, it's disproportionately bad news when the price goes down because it was generating around 50% of all of its revenue prior to the war in Ukraine from the sale of oil. Now, obviously, as the value of oil has gone down and also the volume of oil that Russia is selling has also reduced as a result of the restrictions put in place by the sanctions, that's actually reduced the total amount of income that Russia is receiving. Now, if we have a look at this chart, it shows the discount that Russian oil has been selling at since the start of 2022. So you can see that before the war started, there was very little discount, around $2. So it was slightly cheaper than other forms of oil, mainly because it was a bit more difficult to get. You had to transport it further, and so it wasn't quite as attractive. So Russia had to cut the price a little bit, but a lot of the oil was being sold at that time through pipelines into Europe, and so the transport costs were minimal. Immediately after the start of the war in Ukraine, we saw the discount rising to $39 per barrel. That's what it was by April of 2022. Now, that is a massive discount against the oil price. But as we've just discussed, oil prices at that time had actually jumped up to $120 per barrel. So even though Russia was offering a massive discount of almost $40, it was still selling its oil for $80 per barrel, which was more than it had been selling prior to the war starting. So perversely, it was actually good news for Russia, because even though it was offering this massive discount, it was still getting more per barrel than it had been before the war started. Now, over time, we saw that discount reducing because Russia found a way, it found buyers. So India was quite happily buying lots of Russian oil because it didn't bother applying any sanctions and it was disregarding any threats from the West. It was happily buying all the oil it could for as cheap a price as possible. However, over the last 18 months or so, we've started to see the sanctions having more bite. So we saw the price cap initially brought in at $60 per barrel. And so that reduced the amount that Russia was able to sell its oil for. Now, that's actually been updated recently to 15% below the current market value, because $60 per barrel became irrelevant when market prices dropped to around $60. So we had to change the way that it was working. And you can see that by the end of 2025, the discount had reduced to around $12 per barrel. So that isn't that much difference to where Russia was before the war started of $2 per barrel. It's a bit more, but not that much. But what you can see over the past few weeks is there has been a huge increase in the discount that Russia is now having to offer. And so the latest data that was reported on this chart for the 14th of November was that it was $23 per barrel. However, it's now greater than that because Russian oil is selling for $36 compared with the market rate of $62. So we are now talking almost a 50% discount. It's around about 40%. And what that means is that Russia is going to see a huge reduction in its revenue. And the reason why this is so important is because oil makes up such a large percentage of both Russia's revenue and also its GDP. So we are seeing Russian oil sales being strangled by the latest sanctions. It's becoming more and more difficult to buy Russian oil because if you're an Indian or a Chinese business and you're making that purchase, then you are then subject to secondary sanctions. So if it's proven that you're continuing to buy oil from Rosneft or Lukoil after the 21st of November, so basically from now onwards, then you could find yourself locked out of the global payment system and being hit with sanctions, which would mean that your business wouldn't be able to trade. And as we've talked about before, whilst China and Russia are very important to Russia, they're basically dependent on those oil sales. From China and India's point of view, it doesn't have the same level of dependence because Russian exports, from China's point of view, represent around 2% of all of Russia's sales. So 98% of things that China are selling are going to all of the rest of the world. So China wouldn't want to gamble that 98% just to keep buying Russian oil, even if it is half the price of Western oil. And it's the same for India. The vast majority of its exports go to the rest of the world. In fact, Russia is a very small percentage of India's export markets. And both China and India are dependent on their exports. They are exporting nations. So they won't want to gamble everything just to keep the relationship with Russia going. And that's going to be a major problem from Russia's point of view because they don't have any other major large countries that they can turn to. At the start of the war in Ukraine, they were able to ramp up the sales to China and also find new buyers in India and Turkey, also ramped up their sales. All three of those nations are now cutting back as a result of these direct sanctions on Rosneft and Lukoil. So the walls are now closing in on Russia. They're finding it more and more difficult to actually sell their oil. I recently posted a video talking about the fact that there is over $20 billion worth of Russian oil currently sitting on the oceans because they've loaded up all of the tankers. The tankers have set sail from Russian ports, but nobody actually wants to take delivery of that oil. And at some point, Russia will run out of all of those tankers because there's not an unlimited supply. And Russia doesn't have anywhere to store this oil. So if this situation continues, which it will, because the sanctions aren't going away, then Russia is now going to have to cut back on its production because it can't keep producing millions of barrels of oil per day if nobody's buying them. And if Russia has to cut back on production, that is going to cause serious long-term problems for the oil industry because a lot of the oil fields in Russia are in really inaccessible areas with very cold climates. And so the last thing that you want to do is start playing around with the flows of oil, cutting back on those flows, or even stopping them if you don't have any buyers, because it's not quite as easy as just switching the tap back on and everything just starts flowing again in 6 or 12 months' time. If you block all of that oil flow, it's going to be really difficult and challenging for Russia to get it going again. And as you'll be aware, Russia's already under severe sanctions with regards to technology. It's already lost access to all of the global major oil partners that it was working with before the war in Ukraine started. We have companies like ExxonMobil, Shell, and BP that were all operating in Russia full time. They've all exited as a result of the invasion of Ukraine and the sanctions. So Russia is in a very difficult situation if it wants to have to get those oil fields going again, if it needs technical expertise and technology. It doesn't have access to the microchips that it was already buying previously before the war started. So there are some major technical challenges from Russia's point of view that could cause it major issues in the future. So all of this is pointing to the fact that the Russian oil industry is currently struggling. It's struggling to find buyers. If it doesn't find any buyers soon, which realistically it's not going to be able to, it's going to have to cut back on production. And if it does that, that could cause long-term problems for all of those oil fields and mean that Russia is in a very difficult situation if and when those sanctions are ever released. So what's the summary and conclusion today? Well, I wanted to post this video because we've been talking about the increase in the sanctions over the past couple of months against Russia. And I think the two biggest ones were the sanctions against Rosneft and Lukoil. They have had the biggest single impact out of any individual sanction that we've seen in the past 3.5 years, because those two companies are the biggest oil producers in Russia and they're the biggest exporters. And if you've been following the channel, you'll know that Lukoil actually developed a lot of overseas interests. So it bought interests in places like Bulgaria and Romania. It actually has some gas stations in the USA. So it had lots of different facilities operating all around the world. Now, those facilities are currently under the microscope because they can't continue trading because Lukoil is unable to make and receive payments. So there are lots of buyers who are now trying to buy them at a knockdown discount price because Lukoil doesn't have any negotiating position. It can't really take the highest bidder because there won't be that many bids. So, and this is a great opportunity for companies like ExxonMobil and Shell who can buy these assets, which are very rarely up for sale, for basically about 20 cents on the dollar. So this is a great deal for those buyers, not a great deal for Lukoil or the Russian economy, because they're basically waving goodbye to all of those overseas investments that cost hundreds of billions of dollars and took 30 years to build up. They're basically all walking off into the distance. And even if a price is paid by those buyers, Russia won't receive the money because it's facing sanctions. And so all the money will go into the frozen accounts that's already got about $300 billion worth of Russian assets sitting in it. So that's been really bad news for Lukoil. But the direct sanctions against both Lukoil and Rosneft are now causing major problems for the Russian oil, not just the overseas assets, because as of the 21st of November, nobody is allowed to deal with either of those companies. So their market has now been restricted to Russia, basically, or places like Venezuela or Cuba or partners of Russia who don't care about being hit with secondary sanctions because they're already under major sanctions. Now, clearly, Cuba doesn't have any money. Venezuela doesn't need to buy Russian oil because it's got the largest oil reserves in the world. So Russia doesn't really have anywhere to turn. And what we are now seeing is the price of Russian oil is collapsing. It's currently sitting at $36 per barrel, compared with $62 for the global markets. So the discounts that we've been seeing over the past 3 years have suddenly become huge. And I think it's likely that those discounts will get larger and larger because it would be a very big gamble for anybody to place a major order with Russia right now, because you'll get found out by the rest of the world and you will then be cancelled. So you won't be able to export anything to any of the countries from the West. And as we talked about earlier in today's video, the West represents one of the biggest markets for both China, India, and Turkey, who are the three biggest buyers of Russian oil. So they've had to make a difficult decision. Do we carry on buying Russian oil at a discount and lose all of our exports, or do we stop buying Russian oil and carry on with our export business as normal? And because over 90%, over 95% of all of their exports are going to countries that are not Russia, that is a no-brainer of a decision. So Russia is now finding that after 3.5 years, the sanctions have finally got teeth. They are biting into the Russian oil industry, particularly those two big companies, Rosneft and Lukoil, who were basically exempt from the sanctions. Up until recently, they've now been hit. That means that they can't do any deals. Nobody wants to trade with them. So the price of Russian oil is dropping like a stone. And this is really going to hurt the Russian economy, probably more than any other sanctions that have been previously put in place, because Russian oil is the lifeblood of the Russian economy. Prior to the war in Ukraine, it was providing around 50% of all of Russia's revenue. Now, that percentage has dropped as the total revenue has gone down. And if it continues falling, then Russia is going to find itself in an even bigger deficit. It's currently spending more than it's earning before we've even seen these sanctions kicking in. Once these sanctions take effect, Russia is rapidly going to run out of money. And so it will face the prospect either of raising debt to keep the war in Ukraine going. And there's a big question mark as to who's going to buy that debt, even if they do denominate it in Chinese yuan. Will Chinese investors want to buy bonds in Russia that basically are funding the war in Ukraine? They're war bonds, essentially. I'm not sure China will want to do that. And so Russia may find that it can't raise any external finance and therefore has to raise its own capital within Russia. And that's going to build up more and more debt and really put Russia into a very dangerous situation. So I think what we're seeing in today's video is that the sanctions are finally hurting Russia in the way that I think they were originally intended to, way back at the start of the war in Ukraine. It's taken a long time to get there. However, I think these latest sanctions on Russian oil are now working. We're seeing the price of Russian oil falling. That means Russian revenue is going down. Russian GDP will continue falling. We've already talked about the fact that Russia is potentially facing a recession within the next 6 months. So all of this is really bad news for the Russian economy, and I think means that there will be some serious discussions about whether or not a peace can be agreed at some point in the near future. So hopefully you've enjoyed today's video, you found it useful, informative, and hopefully thought-provoking. If you have liked what I've said, then please give me a thumbs up. Please subscribe if you haven't done so already. Thank you so much to everyone that's supporting me. If you bought me a coffee, and I noticed somebody bought me 4 coffees this morning, so thank you so much for that. Really appreciate it. You were anonymous, so I don't know who it was, but hopefully you're watching this video. Thank you so much. Or sent me a YouTube super thanks, or signed up as a Patreon or YouTube member or Buy Me a Coffee member. Thank you so much for that support. Really helps to keep me going. And here's something to put a smile on your face.